G'day expats and welcome to another episode of Expat Chat, episode 30. Apologies for the gap between episode 29 and 30, between a lot of work being done, and also we decided to give folks a bit of a break over the Northern Hemisphere summer holidays. We didn't expect you guys wanted to listen to finance podcast episodes on your break. So welcome back, James. For those on the call, I'm joined by my colleague and friend, James Ridley, who's the Managing Director of the Australia Pacific and the Americas region. And my name is Brett Evans and I'm the Managing Director for the Europe, Middle East and Africa region. G'day, James.
G'day, Brett. How's everything going on, I suppose, into the deserts? I mean, we're in a bit of a sprint finish now, aren't we, towards the end of the year?
Mate, I was in the hardware store the other day, and for those folks out there who've never been to the UAE, yes, we do have hardware stores. They are the size of Bunnings. They don't have sausages out the front, so my daughters are always disappointed when I take them there. But they're playing Christmas carols, so that's the demarcation to me that Christmas is just around the corner. Expo started this month here in Dubai, so by all reports, it is a very busy time out there at the moment, which is good to see. People are travelling, and I'm hearing rumours that masks here may be removed, the requirement. Saudi just announced they've removed their requirement to wear masks. So every week things change very quickly.
I mean, it's all good signs. All signs point to maybe a bit of an end to, I suppose, COVID-19. But I think it's a case where we're always going to just have to work out living with COVID-19. But it's funny you mentioned Bunnings before in Queensland, because they're still getting underway with trying to hit that sort of 80% mark with vaccinations. Bunnings warehouses are throwing up their hands to be vaccination hubs. So you can go in there, get your vaccine, get your sausage.
That is the first bit of common sense I've heard coming out of Australia with regard to the vaccine rollout. That is fantastic.
Never been incentivized so much to go out and get a vaccine, and I can have a sausage at
the same time. I think it's gold. That's to me they should have been done that last year. Australia would have won the race.
Yeah, that's right. I mean, our premier in Queensland, she's it's Fort Knox, Queensland, to be honest. Trying to get in the state borders. So they've sort of, the way we're going at the moment with vaccination rates, they're sort of earmarking the 17th of December is when borders will come down. There'll be interstate travel. And I think they're going to relax the quarantining rules if you're vaccinated coming back in. So I think they're trying to take the, I suppose, template from the new New South Wales.
Yep.
And I guess it's just to wait and see how that goes. I mean, I'd expect a spike in sort of the Delta if you're just, going to be pretty fast and loose. But once you hit that sort of 80%, I think everyone just relies on herd immunity now. I think that's what they're going with.
Yeah, no, I totally agree. And I think, if I take my own personal experience as a bit of a litmus test out there, 6 months ago, I knew a lot of people who had coronavirus. At the moment, I know none. So whether you take the government numbers, at hand or not, personal experience shows that it is improving, which is good. So look, I think it's nice to see New South Wales sort of setting the standard there when it comes to opening things up as of 1st November. I imagine Victoria's could be just behind that because they don't like to be one-upped by New South Wales. The concern is they've got quite high numbers as opposed to New South Wales, and certainly Queensland. They're just going to have to crack the door open and let the virus come through, and that may be the catalyst for others who are sitting on the fence because they're not living. People in Queensland aren't living with coronavirus, nor Western Australia. So
no, we aren't. We haven't had to just because of how strict the border controls have been. But you're right. I think everyone has their Delta experience, and I think if we get to that 80%, naturally border zones will come, or the borders will come down, interstate and maybe international a little bit as well, and then we'll have obviously active daily cases, but because we have that herd immunity or 80%, we're not going to be panicking about going into lockdown. They might have some sort of restrictions still in place. I know there's talk about how some businesses, if they are mandating that you must be vaccinated to enter the business, then those businesses can have absolutely freedom around sort of how many people you can have per square meter or whatever it might be, no mask. Whereas businesses that don't abide by that, and allow anyone, even if they're not vaccinated, they're still going to have some sort of restrictions placed on them. So it's very interesting to see that they're going to be sort of taking that template as well, which I think is from Victoria, if I'm not mistaken. But it's going to be interesting for all the anti-vaxxers that are just sort of waiting and seeing, because that's the problem in Queensland. We've been very lucky. So you've got all these people that are just, we're just going to wait and see. We're not really in an urge or a hurry, but it's going to get to a point where if businesses start mandating that and you can't go out for, to a restaurant or
beer or a sandwich, yeah.
beer or sandwich, even your local Coles, that's when you'll probably start to see, obviously, your vaccination rate start to gain some traction, especially towards the usual end of year shutdown around Christmas, summer, holiday season.
Yep. No, look, it's going to be interesting to watch, and I just hope that by the time we ring in the new year, Australia is in a different place. I think, the pain has caused Australian expats around the world with those border closures being immeasurable. I honestly don't think Australia will, from a government point of view, will recover from it. Canberra's just very lucky that expats can't vote. Otherwise, Scott Morrison would be out on his backside very, very quickly.
Yeah, absolutely. The way they've handled it compared to other countries, a bit of a black mark against the government's name. And I suppose it's probably a nice little segue into what we want to talk about today.
And before we do, we're going to do the jingle.
The disclaimer.
All information that you have the privilege, pleasure, and joy of listening and watching today should be purely for satirical purposes only. Do not take this as financial advice. Please speak to a professional like us.
I think every time you say it, Brett, I think you say it different ways. I think that's 30
you got to mix it up, otherwise you get bored with it, don't you?
But today, modernising tax residency rules, I thought we'd touch base on it, go through it, just a bit of a high-level summary of it, because I know I've got a lot of clients and just even a lot of expats in general that keep reaching out, wanting an update. Brett, I know you get hounded constantly over there about what the news is. And I mean, I suppose, what is the news, Brett?
Mate, the news is there's no news, which is very bizarre. Normally when you have an announcement in May, you've normally got the explanatory memorandum out by July and August. And just to explain to the folks out there what an explanatory memorandum is, it's virtually an explanation of the bill, which will become legislation to change it. So you need the EM to understand the bill. There's been neither at the moment. Now, whether that's because Canberra's had their hands full with dealing with all the issues they're dealing with at the moment, every week and every month that goes by that an EM or the bill hasn't been released means that there's a little bit less guaranteed certainty that the bill will come into place or be enacted, I should say, in this financial year. Now, Canberra have been known to fly, bills through very quickly, but just to explain to the folks out there, essentially what they do is they release the bill, release the explanatory memorandum that just explains the bill. It gets voted in the lower house, the House of Reps. If they pass it, then it goes to the upper house, the Senate. If they pass it, then it receives royal assent and it becomes part of law. The biggest issue right now is we've got nothing. So, and as you can see, there's a bit more water to go under the bridge before this thing becomes law. So at the moment, that 30 June date that everyone's sort of worried about is sort of slipping in my mind. We're in, what are we, almost through October. We're in October now, we've got November, December, and Canberra only doesn't sit all the time, doesn't sit every week, doesn't sit every month. So, the chance of this coming out and going through the lower house before the end of this year is getting pretty slim.
Yeah, exactly right. I mean, I think 1st of July 2022, that's when they're talking about trying to bring this into effect. I mean, probably a good template or examples, the main residence exemption, because that was really targeted at foreign residents, but it really just hit home in Australian expats. Announced it in 2017, wasn't actually legislated formally until December 2019, and then that was as of 30 June 2021, so as of 1st July, I guess, in the current financial year that just went, 2021. So it can still take some time, but that's 18 months roughly until the EM was released, and then it was finally formalised roughly. So always a bit of a concern, and I suppose there is a lot that they need to unpack about where they've pulled legislation from. We both know where it's come from, that Board of Taxation submission 29, but there's just so much which doesn't really align quite well with the day-to-day and I suppose economic interests, family ties of an Australian expat. It's still very quirky and very clunky.
To me, there's a couple of key things. The first thing is the fact that in the Board of Taxation report from 2019, they did actually talk about a implementation period that may be 12 to 24 months. So let's say, for example, this thing comes in on the 1st of July next year. It may not actually apply for the next 1 or 2 years. And then they're also talking about, how we're going to incorporate it into the existing framework of expats. Is there going to be a grandfather? Is there going to be an opt-in process? How's that going to work? These are all the unknowns that we don't know. There's a recommendation that the Board of Taxation has made to Canberra, but we don't know what Canberra's thinking. They might take all the recommendations. They might go, we'll take that one, that one, that one. We just don't know. And to me, there's still a lot of gaps. Certainly, it doesn't provide any clarity for those expats who have children at boarding school. If your child is at boarding school, is there a carve out for that? We don't know. That's what the EM is going to explain. To me, the 45 days is a bit of a nonsense thing, because yes, the Canberra's going to argue, well, most people only get 30 days annual leave anyway, so why they don't need 45? What they don't take into consideration is the fact that children's annual leave from school is a lot longer than 30 days. So essentially they're stopping kids from going back with their parents back to Australia. So there's a lot of things that we've prepared in a submission that will go to Canberra once the EM comes out to really, solidify. Don't get me wrong, and a lot of people are scared about this new legislation. I think there's actually positives out of it. Number one positive, it is black and white. At the moment, the current residency rules are very ethereal and behaviour based, and you want to get your crystals out and measure this and do all these sort of things. Whereas under the new rules, it is black and white. If you are outside, if you have not returned to Australia for 45 days or greater, then no matter, you can own half of Sydney, you are a non-resident for tax purposes. End of story. There is no question. There's no, there's so many rumours that go around the expat community, and this just squashes all that out. The other one too I do love is the fact that trailing spouses of diplomats who in the past have been unfairly tagged as a resident for tax purposes because of their husband or wife, might be the ambassador, but they can't work locally because they'll pay Australian tax. Under these new rules, guess what? They are, unless they're working for the government in some sort of capacity or engaged or employed, they're now a local resident, which is great. So, we're seeing more and more trailing spouses in that diplomatic community, who to me do want to do something. It's so that's a good thing about it. I think it sorts out the question marks regarding a lot of our clients who are super yacht, sort of location agnostic sort of people. In the past, they're a resident of nowhere because they're residents of the boat. Under new rules, as long as they don't get back for Australia for greater than 45 days, they're non-residents. So suddenly that provides a bit of clarity there. Certainly, it's going to become difficult, with families who are split. And we do have a lot of those sort of clients who are, especially for those clients who live in jurisdictions that are not exactly Paris. So, the wife and the kids may live back in Australia, the husband works overseas. And in that case, let's say the law goes through as it's written or recommended by the Board of Taxation, more than likely, as I said to one client the other day, who's in Saudi, I said, yes, don't go back to Australia for greater than 45 days. And then if you want to see the family more, guess what? Meet them in Bali or meet them in Singapore. The cost of that trip to your family will be far less than the tax you'd pay on your Saudi income. So it's those sort of things, I think, with the benefit of being black and white becomes the disadvantage of being black and white. You know what I mean? There's no wriggle room. So anyway, to me, the big one is the 90 days versus the 45. Boarding school, there's a couple other considerations there as well too. There should be carve-outs for people who have business back in Australia that should not account for the 45 days. There's a couple of things there that we want to really highlight to Canberra once we see that EM.
That's right. It's a piece of legislation which is well overdue. It's something which is replacing the very old
1936.
Yep. So, if you imagine what the workforce was like back then, it's not a case where you could easily just hop on a plane and travel overseas and work all around the world. So it's well overdue. The primary sort of bright line tests, it's good that that's sort of being brought through, the 183-day test. And then you're right, you've got those factor tests, the 45 days, you've got the overseas employment rule, you've got economic connections or interest back in Australia. So I know a lot of clients are sort of concerned about that because it seems like that can almost double up on each other. Like you'd have a property that's rented but then you can also have a bank account worth more than $10,000 in it. And it's almost a case where most people will easily be able to satisfy those two factors. So if they trip over another factor, being that 45-day rule, well, too bad. You're likely going to be a tax resident for that full financial year, which is just ridiculous. That's the biggest issue here. I know that they need to consider pushing out the 45 days and maybe make it, like you said, 90 days, something that's just a bit easier
manageable
to navigate. That's right, especially if you have kids, family ties. I know that's going to hit home with a lot of clients of mine where you've got the spouse, obviously staying home, kids are in school, but obviously the income earners overseas. So that's a main concern. And how do you navigate that space? Well, you hit the nail on the head. Well, they don't come back. If they come back, it's under 45 days. If they want to spend more time, or family, heads over and does a holiday from somewhere else, or heads over to where they're residing. So that's going to be probably the biggest challenges. It's just more so, I guess, as we know, the unknown, not knowing anything right now and not having an indication. The government's been very quiet. So we just don't know when Canberra's going to release that EM.
We can have educated guesses, and a lot of folks are asking about the cash component, as an economic asset. And my theory is Canberra likes to piggyback on other legislation. So people are saying, what comprises of a large amount of cash that would trigger the economic assets test? My theory is going to be 250,000. And the reason being is because that's already a mandated amount as part of the government guarantee for bank accounts. So they can sort of piggyback off that. They don't have to pick different numbers for different levels. So my theory, and I say that to clients all the time, and for those folks on the watching or listening, this is not gospel. We don't know yet, but my theory is going to be balances greater than 250. We'll see if we're right.
Yeah. I hope so, because another thing with the economic connection or interest is just super funds. Is that most people have super funds that have worked, for a year or two in Australia, and then if you're taking it a step further and you're looking at, the ceasing residency part of it, the overseas employment rule, that's obviously a key sort of turning point and factor as to whether you can be deemed to be a non-resident. So those expats that I suppose are heading overseas to find work, they're not going to be able to declare themselves as a non-resident for some time. And even then, that overseas employment rule, it relies on the fact that that contract is for a minimum of 2 years. Most clients that I have and most, I suppose, expats that I speak to, they're either on a rolling contract 1 year by 1 year, or sometimes it's a 2-year max. It's not usually a case where they're given a 5-year contract or anything like that. It's very rare. So there's a concern around that. That needs to be obviously fleshed out a bit more because
I reckon there'll be an exodus out of Australia of people once, fast forward, borders are relaxed and those sort of things.
Mm-hmm.
And maybe I'm relying on them knowing too much, but I think there'll be an exodus out of Australia, people who want to become expats, who want to get out before the new rules. Because as I explained to a gentleman the other day, it is adhesive. If you move overseas, without a contract, then for 3 years, you will be deemed a tax resident of Australia. Now, depending on the country you're going to, that might have a double taxation agreement. The tiebreaker clause could save you there. But there's not that many countries, or not enough countries, that have a DTA with Australia. So UAE, Saudi, Oman, Qatar, just in this region alone, none of them do. And then you jump into Hong Kong, jump into places like Portugal. There's a lot of other places as well that don't have that benefit. So there's actually Treasury are doing a consultation process with Australia's tax treaties, and we'll probably submit a submission on that to highlight a couple of the gross inadequacies of the DTAs at the moment. US number one, no carve out for super. There's quite a few countries that we can sort of really hone in on. It's interesting though, the Border Taxation did refer to super in their report, saying how they did consider making that a qualifying fact if you have super in Australia. But then they did highlight the fact that because you can't take it with you, you should not be penalised because you have no control of that. So I don't think super would become an issue.
Yeah, I probably agree with you, to be honest, because it would catch out a lot of temporary resident holders or visas and foreign residents have no interest of coming back to Australia for whatever reason. They've never obtained permanent residency. They might have been on a 457 visa, but they're always going to have some super left over if they haven't done a DASP payment. So, yeah, I haven't agreed that's almost a catch-all if they do legislate that piece. But you're right. With the changes with the overseas employment rule, people that are looking to leave Australia and retire overseas are just, they're not going to be able to cut ties with their tax residency, not for the first 3 years, but even then, they're not going to be able to show they have overseas employment. You're right about the tax treaty interactions where if there is a DTA in place and based on the DTA and the residency rules in your new country, if you are a tax resident of that country and that's clear, crystal clear, then you won't be a tax resident of Australia. So you can lean on that. That'll be pretty easy for the UK and I suppose the US and some of those countries.
Singapore. Absolutely. And yeah.
Yep. And then, as you mentioned before, no DTAs, Middle East, there's a lot of information exchange agreements, I guess you could say.
CRS, yep.
Yep, but none of these DTAs. So clients that are in those areas where they don't have DTAs, it's going to be very interesting to see what sort of comes around, because I don't think the Canberra or the Board of Taxation will try and provide consultation on every country that doesn't have a DTA, how that's going to be looked.
Yeah. Oh, look, I mean, there's so many gaps. That's the problem. And that's one of the things we want to see that EM to highlight. One question that it gets asked a lot, with the high cash balances, does that include offset accounts?
Yeah.
Don't know.
Yeah. I mean, they might need to actually put in interest-bearing accounts, because, every now and then that's actually put somewhere, interest-bearing accounts.
Yep.
But an offset account, that's technically not an interest-bearing account.
Exactly. So I don't know. Unfortunately for those on the call, we're probably providing more questions than answers. but I guess it's important to, mull around the different concepts and the key considerations that we're looking at and we hope to address, because there still are a lot of questions out there that we need to clean up anyway.
That's right. I mean, based on what we've seen, the Board of Taxation report is about a 120-page report. There's a lot in there. But then we've been given a half a page dot point summary from the budget. So there's just such a huge gap in what we don't know and what Canberra and the government's thinking. There's a lot of, and I suppose what we're talking about today is, we've thrown out probably more questions, but this is all the questions we need to know so you guys can have clarity. And then that way, developing a bit of a strategy so you don't accidentally trigger being a tax resident again. We can't wait till they provide some clarity, because we'll be obviously bombarding everyone with webinars and seminars and updating you and educating you on ways that you can work around it.
Exactly. So hopefully, at least if we can get an EM out before the end of the year, that'd be great. Just to know where we stand. We know which way to face the guns, because as certainly our clients know, and a lot of expats, Australian expats know, we do get very vocal on the lobbying side. We did it with the main residence exemption. We will do this again. We will highlight, key issues. Sometimes we're successful, sometimes not. But, we won't be someone who just sits there and just lets Canberra roll this out and not at least let them know that they're a bunch of muppets and they need to make these fixes.
Yeah, absolutely. I mean, adding another question to sort of economic connections, if you hold shares here, I mean, is that something that's also going to be considered an asset?
I don't think that will, because to me, then you would start to grab in non-resident investors who, they want to invest in the Australian share market for liquidity reasons, for capital reasons. So, I don't think that would be the case. And that's why they've very clearly said taxable Australian property. In the economic assets factor test, because I think then where do you stop? BlackRock are putting money in Australia. Does BlackRock get classified?
Exactly.
Like this?
No, but the way it's worded, it's almost a catch-all. I mean, it's we might as well just consider and call ourselves the US, because that's the way it's worded. It's going to catch everyone. They obviously the US. They tax you on a citizen basis. When this came through, it's almost a catch-all.
Citizenship-based taxation by stealth.
It kind of is, but it isn't. There's going to be ways to navigate it, but I think we've probably jumped into it too much today.
We've gone down the rabbit hole and we can keep going, but I think we'll wind it up there. Just a bit of a housekeeping as well too. James and Jeremy Harper, who's the Managing Director for Atlas Mortgages, a mortgage division that we started early this year to really be the ultimate mortgage broker for Australian expats. That's all this business is designed for. James and Jeremy, JJs, have started up a separate podcast called the Expat Mortgage Podcast. So that's on Spotify, Apple, everywhere else. If you are interested in managing a mortgage, getting a mortgage and stuff like that, and want to learn more about the pain points, by all means, head on over to that channel as well too. I think what episode are you guys up to now? You've got 5 or 6 in the can already. So
I think we've got 5 or 6 out there. There's a bit of a pipeline of them coming through. There's a few coming through regarding just serviceability, credit policies, how they're treated when you're an expat, depending on the country you're in, even expenses down to Uber Eats and all those sort of things, how it's looked from an Australian sort of provider. So we go into it nitty gritty a fair bit. There's a lot of broad topics we cover, but I think if you're listening to the first season, you'll be walking away knowing exactly what you need to know to actually get a mortgage in Australia.
And that's what the whole point. We do webinars, podcasts, just helping you guys out there make informed decisions. You don't know what you don't know. So, we really want to index on this. So, certainly the reviews and the ratings you guys are giving us on the channels are fantastic. We appreciate it. They are going up. They help us get a bigger voice. They help us allow us to provide education at scale. And, really appreciate it. Also, to another shout out for our Facebook group, which is sort of like the word version of what we try and do here. The Australian Expat Financial Forum, both on LinkedIn and Facebook. Jump across there, join. We do have conversations, not only James and myself providing information, but people often jump in there asking questions, and everyone sort of helps each other out too, which is great. So
it's really
jump onto the Australian Expat Financial Forum, mate, I think we'll wrap it up there for this episode 30, and see you on the next one.
Sounds good, mate. Have a good afternoon.
You too. Thanks, mate.